Hello there, and welcome to another edition of the Premier Investments and Wealth Management Financial Program. My name is Doug Wagner, your host. Before I introduce the gentleman around the table with me, I want to take a second to remind you to grab your phone, your tablet, maybe sit down at your laptop or just put it on your lap because that's what it's for. Don't put the desk on your lap, though. That doesn't work too well. Open your desktop and go to your favorite browser. Click on premieriwm.com. Odds are, if you're watching this show, you've been there before, but I want to say premieriwm.com. Then click on Get Started, answer a few questions. They will provide you with a one-page Premier Vision document. And it's really that simple for you to find out, are you ready for retirement? Are you ready for maybe the future of your kids' education? Whatever you're trying to invest for, not just save for, but invest for, they'll be able to help you with that Premier Investments one-page Premier Vision document, premieriwm.com. They'll even schedule an appointment with you so you can sit down with one of the folks who are around here. You can schedule an appointment online at premieriwm.com or call 800-383-6590. Again, Premier Investments and Wealth Management, named to Forbes 2025 Best in State Wealth Management Teams. Introducing from your right to left, from my right to righter, he is
just further to the right.
Exactly. He's a wealth advisor, accredited investment fiduciary, a certified financial planner professional with over 10 years of experience in the investment industry. He is Dr. Casey Mushrush.
Good to see you, Doug.
Hey, how you doing?
I'm doing good, neighbor.
Good summer for you so far?
Oh, so far, kids are busy. Yep.
That's the most important thing.
You've been watching us trolling our way down to the pool every about 4 times a week, actually, at this point. So.
Oh, it's a perfect time to do that. Also, to his right, a wealth advisor with over 30 years of experience in the investment industry, Jonas Everett. Good to see you, Jonas.
Good to see you, Doug.
How are you?
Great.
Got the sunglasses just in case it gets so
Just
bright
in
here
case,
today.
yep.
It's awesome.
The future's so bright, I got to wear shades, Doug.
You just put yourself right in that box of that person who's old enough
That's right.
to know that reference.
Apparently, I'm not in that box.
I know you're not in that box. That last voice that you heard, he's a president and wealth advisor, accredited investment fiduciary as well. Over 22 years in the investment industry. That's how much experience he has. He is the big kahuna, Roger Abel. Good to see you again.
Good to see you, Doug.
How are the fish biting, buddy?
They're pretty good, but the boat's riding better.
Ooh, okay.
More boat rides than fishing right now.
Okay.
A couple weeks left, and
yeah,
that season will kind of be over, unfortunately.
Mm.
Went really fast. It's hard to believe it's halfway through summer already.
Man.
I mean, it's July something. I've lost track of the days, but
I know.
it's July something. I know we're halfway through.
One. When you start thinking about how quickly everything goes, and it's for us, we remember just the very, very beginning of the year, everybody was terrified about what the market was going to do, and then we started talking about Independence Day, the idea
Liberation
of Trump's
Day.
tariffs. Yeah, exactly.
Day.
Yeah, and we started talking about that, and the idea that we've been moving, and it's been such a fluid situation. Here we are back now, and they keep on going. Where is it? Is it going to be a record high? Or are we going to be paring back? But the idea that you invest, buy low and sell high, that makes sense. But when we're already at record highs in a lot of cases for these markets, I need you to sort of reset everything for me, because it's like a new paradigm. Because every day it seemed like, for a while there, every day was another new high, Roger.
There's a new high every 19 days on average.
Mm-hmm.
Most people don't get that. Obviously, buy low, sells high.
Mm-hmm.
If prices were to stay in a range, but if you really think about it, what do asset prices do, or how have they trended over time? 100% a fact, they have trended higher. Over time.
Mm-hmm.
So the idea that you would buy low and sell high, it's actually not that grand of wisdom.
Mm-hmm.
I mean, yeah, if you're looking at something that ranges between $10 and $20, yeah, sure. Well, we should sell at 20, buy at 10. That's not what stock prices do. Indices do. They trend higher. So you have to almost reframe how you're thinking when someone says, is it too high to buy? And we have some data here. Since 1957, the S&P 500 has closed at a new all-time high 1,200 times. So it averages a new high every 19 days. And we're going to talk later in the show about the numbers behind it, but buying low and selling high is not the way to win. That's a trader mentality. It's not an investor mentality. You might get lucky. But here's what's really, I think, very interesting about the human psyche. There's two components of the stock market, right? There's prices and volatility.
Right.
Those are the two things that really run it. And volatility always reverts to the mean. So if you have a mean number, volatility always reverts. But as humans, how do we react to volatility? When it hits an all-time high, we're like, oh my gosh, it's going to be here forever, even though we know volatility reverts to the mean, but we run our emotion off of that volatility of, oh, it's really high, things are dangerous now. For example, the tariff.
Right.
It was Independence Day or
Liberation Day.
Liberation
Thank
Day.
you very much.
Okay, so tension's running high. Everybody thinks it's going to stay high forever. We should get out of the market. Well, but if it reverts to the mean, the prices trend higher, you should have just bought.
Yeah.
So I think that's one thing to recognize, that people are just really bad at trying to time the market. The best time to buy is when you have the money to buy.
You've probably heard the saying, buy low, sell high. But in a market that keeps hitting new all-time highs, what does that really mean? Should you wait for a dip, invest anyway, or sit on the sidelines until things feel more certain? At Premier Investments and Wealth Management, we believe successful investing isn't about timing the market. It's about having a plan. That's why we created a free educational guide, Investing During Market Highs. If you're feeling uncertain about investing when markets are up, this guide is a great place to start. Download your free copy of Investing During Market Highs at premieriwm.com.
And it's something, Jonas, as far as this goes, instead of like the buy low, sell high, it's buy and hold. I mean, really, because that's the way to get what you're talking about as far as selling high. If you're looking at a new market high every 19 days, just hold it for the long term.
Well, I look at the buy low, sell high concept, and I think it really hit me. I was getting ready for the radio show on the kitchen table one time, and maybe it was the computer room, and dinner was ready, and my wife Jody came in and said, "What the heck are you doing?" And I had all these papers spread out. And I'm like, "I'm getting ready for the radio show." And she's like, "Well, just tell them to buy low and sell high and get in there and eat." And I think that, it's just a concept for people that aren't in the investment business to grasp, because I think about April, and I think about a phone call that I received from some retired customers, and they were panicking. I mean, they were legitimately threatening to go to cash. And I said, "I want to be your calming voice here. Is this an opportunity for you to buy low?"
Yeah.
And he started to chuckle. He's like, "What do you mean? I want to sell my investments. What are you talking to me about buying low?" And I think that it's just it is better. I think that Roger's right. It's better to kind of reframe this. That statement, but it kind of reminds me of what Elias said one time on the radio show, that really you don't belong. And if you think Americans are done buying stuff, you don't belong investing in the stock market.
That's a very good point, Casey. I'm going to come to you with that reminder. Go to premieriwm.com. Check out the website. Also, you can call for an appointment today. If you'd like 800-383-6590. Premier Investments in Wealth Management, named to Forbes 2025 Best in State Wealth Management Teams. Dr. Casey Mushrush, the concept that what we're talking about here is a lot of this tied to earnings, which is really sort of the next point we want to go to, because people continue to buy. And if you think that they aren't, then maybe there's another place, whether it's credit, whether it's cash, the numbers just continue to improve.
Yeah, I mean, if we look at correlations over the course of the last 50 years or so, I mean, there's a 97% correlation between earnings, company earnings, and increases in the stock market. Now, just to put this in statistical terms, that's dang near perfect.
If earnings go up, prices go up. And to your point, earnings, if people started to think about how earnings actually drive stock prices, that would make everybody better investors. And you'll probably elaborate on this, but each sector really has its earnings multiple that price for that stock, right?
Right.
Like if you look at the technology sector, there's an average earnings multiple, the same for financials in different sectors of the market.
Yep.
And if you peel back that layer again for people not in the investment business, do you want to be an owner or do you want to be a loaner? Do you want to own those businesses that have earnings?
And earnings
Or
growth.
do you want to loan your money to the bank?
Yeah.
Or do you want to loan your money to these companies in the form of a bond? And I think that I want to be on the ownership side. I want to be a part of these earnings.
Well, that's where the greatest returns are.
Right.
And that's why historically, because there's more risk in being an owner, right? If earnings miss, prices go down.
Yep. Well, I still look back at that statistical relationship though, right? Because, like anytime we're doing any sort of an analysis as far as like these correlations, really anything over 80, we consider that highly correlated. Like when it comes over to the comparison, at least underlying various different investments. And that is very significant. Like, that 97% correlation on there is just absolutely incredible, at least in terms of that earnings compared to that long-term return.
Yeah, and you start looking at it and you start wondering about, okay, we need to make the case and sort of put this together because timing the market's really difficult. There are reasons to say, Roger, you need to invest, especially when the market is high and especially when earnings are coming in at really good clips.
Here's what's ironic. I think we'd all agree that the stock market being at an all-time high should be a positive, right? But many people look at it as a negative, like, hey, it's at an all-time high. Why would I buy now? And here's something to think about first. All-time highs are a feature of the stock market, not a flaw. Right? People see it as a flaw. That's a feature of long-term investing. You're going to get new highs. The second thing is when the stock market hits an all-time high, it's a sign of growth. That's a good thing. And and I'll be honest, before we put this together and I looked at this chart, I probably wouldn't have thought this way. Like most people think that buying the stock market 5% lower, like that's how you win. But we've got a chart. So if you're watching this online, I'm sure we'll put it up there. But it compares going back to 1989 to today, investing at all-time highs. So meaning you only bought on an all-time high.
You pick the worst day of the market to invest in that year.
Right.
Yeah.
Okay. The 1 year trailing return, the worst day versus a dip day. Okay. So all-time high versus a dip. 1 year later, the person who bought an all-time high averaged 13.3%. The dip buyer averaged 11.8%. Okay. 5 years later, the all-time high buyer averaged 11.5%. The dip buyer averaged 10.4%. So when somebody says buy low and sell high, I don't believe they're a good investor because the numbers prove it doesn't actually work. Like it doesn't work. And part of it is asset prices trend, right?
Right.
Okay, so the stock market goes down 5% and you think it's a good time to buy. Well, what if it goes another 20%? You're buying on the downtrend. There's ETFs out there that buy momentum stocks only in the S&P 500. They vastly outperform the index because they are buying stocks when they're trending in the right direction. And I've talked about this with Elias before. As information moves faster, stock prices tend to move more. If you look at the last two 19% drawdowns, let's look at the last three, COVID 22 and this year,
Right.
that's 19% or greater. 2 out of the 3 were over in 60 days. 60, 90 days, it was over. We're back, screaming stock market. So part of information just moving faster causes people to try to get in and out at the wrong time.
Hey, Jonas, I'm going to come to you before that. I want to make sure to remind people to go to premieriwm.com and click on Get Started. Premieriwm.com is the website for Premier Investments in Wealth Management. You click on Get Started, you'll answer a few questions, and they'll provide for you what's called a one-page Premier Vision document and an opportunity to sit down with one of the professional wealth advisors at Premier Investments in Wealth Management. From there, you can find out and answer these questions. Am I ready for retirement? Are my investments where they need to be, how they need to be for my age, my expected retirement years? Do I want to leave a legacy, or am I going to give with a warm hand rather than a cold hand? How am I going to do these things? Our friends at Premier Investments in Wealth Management can help you. They've been recognized by Forbes as 2025 Best in State Wealth Management Team. And you can go to them and make that appointment online at premieriwm.com, or you can call 800-383-6590.
Do you ever feel like your financial goals are just out of reach? It's time to take control of your future with Premier Investments in Wealth Management, your partner in financial independence. Imagine a financial plan that's as individual as you are. At Premier Investments in Wealth Management, our team of experienced advisors will work closely with you to create a roadmap tailored to your dreams. We'll help simplify complex financial concepts, provide clear guidance, and empower you to make informed decisions. Financial wellness is within your grasp. Visit www.premieriwm.com to schedule a meeting with an experienced advisor today.
Going to wrap up here over the next 10 or so minutes. We're going to talk a little bit about some of the most important things you talked about. We've talked about lows. We've talked about highs. We've talked about people who are very amateur or passive investors. We talk about people who are active investors. But there's some key points that are relevant at any and every single time. Let's take a couple minutes on each one of these. You talk about focusing on your long-term goals. Number one, you don't have that unless you have a
Plan.
financial plan.
And here's what a financial plan does for, because there's two types of investors. You have accumulators and decumulators, those who need income from their investments,
Right.
those who are building. If you're in the accumulation stage, the number one most important thing to get in your financial plan, get your savings rate right. That's all you have to do. It's not that much harder than figuring out what is my savings rate that gets me to accomplish my goals at 55 or 60 or 65. If you can get your savings rate right, you can start dollar cost averaging into good investments. It will work. And like I mentioned earlier, high income people are doing exactly the same way.
Yeah.
I don't want people who are making 200,000 to think that the person making 2 million does it differently. No, they don't. They might dollar cost average more every month or every week,
Right.
but they're doing the same thing. The principles are exactly the same. Because if they don't dollar cost average, you know what happens? The money sits in their bank account and it will get spent on something else.
Right.
Doesn't matter how much money you have. If it doesn't have a purpose,
Yeah.
it's going to go away.
Yeah. By the way, one thing you do is check with your financial and wealth advisor, because you may have some catch-up contributions if you are available for them that you can use some of that money for if you do have money sitting around and just sitting in the bank account. So that's another important part of having a financial plan. Jonas, one of the things that you talk about, and you said this many, many years ago, and you must be a farm boy at heart, because you were talking about the needle versus the haystack and diversifying.
Absolutely. You know, I think that every time I buy an individual stock, it goes straight down. So I have to wonder if anybody has better luck at that. But kind of like Casey talked about, you know, all these investments that we usually look at are prepackaged investments, and they're very, very diversified. So yeah, and you know that if you look at owning a haystack, you're not going to hit any home runs. You're not going to double your money every year. But you look at the data that Roger has, Doug. If I had an investment for you that your money doubled every 7 years, how does that sound?
I'm very happy with that.
I
Thank
would
you.
be very happy
and
with
I will
that too.
continually invest in that.
Yeah.
That's
So
just a pretty average haystack.
yeah, absolutely.
It's nothing special.
That's good. And it's the kind of common sense that you get at Premier Investments in Wealth Management. The other thing, Casey Mushrush, is the idea of you don't want to visit it every single day, right? It's kind of like, you know, I remember years ago when my mom was still alive, talking to her every single day was kind of difficult because you get in that same sort of pattern. So maybe make it once a week. If you're going to visit your portfolio's balance, maybe visit it less often than you think you should. But it's important to have somebody like you as a wealth advisor, maybe a reminder to press that automatic rebalance button. What's the importance of rebalancing?
Yeah, the rebalancing. I mean, if you really look at what it's doing is we're trying to smooth out the peaks and valleys. You know, over time, we have different asset classes. To Jonas's point, if we've got a well-diversified portfolio, they're going to do different things. And really that rebalance is simply realigning that according to what our original allocation was that we developed underneath that financial plan. So it's just making sure that we stay on what that developed target was. You know, and periodically is the way that we explain that to people. And they say, well, how often is periodically? Well, not every day,
Yeah.
but probably a minimum of at least once a year. And then maybe somewhere a little bit more over within that as well.
Well, typically the beauty of rebalancing is it's rules-based, meaning we're going to rebalance 2 times a year, or if one investment drifts and becomes too much or too little of the portfolio based upon market performance, that could trigger a rebalance. So if you had one asset that went up 30%, that could trigger a rebalance, but rebalancing is rules-based. And most people can do this in their 401k. Like they can go hit the button that says automatic rebalance 1 time a year, 2 times, 3 times, 4, whatever. It's rules-based.
Well, and one of the other things it does, and I know we were kind of hating on the whole buy low, sell high idea.
But that's what it does.
But that's what it does.
But
it
no,
forces you over into that
here's the difference.
discipline.
It doesn't tell you to buy low. It's telling you to buy relatively low.
Correct.
It could be higher than it was before. So think about it. If you have two investments in the stock market, one's technology and one's a stock market. The stock market went up 20 and the technology went up 40. Well, we're going to sell technology, buy more stock market, but stock market's still 20% higher. So it wasn't lower. It was relatively lower.
Yep.
And I think that's what people miss. They think they should buy a lower price.
Right.
Relatively lower.
Let's stick over there with you because you brought up something a little bit earlier as far as talking about the accumulation and decumulation, or the distribution part, is that you need to know just exactly where you are to determine what you need as far as the money and what bucket and its availability. And that's something, if you get that wrong as somebody who's not a professional, you can really screw up a lot of things in your life, including taxes, including, well, the investments that you have. Talk to me about the importance of understanding your liquidity needs as you go through life.
Once you're within the distribution phase, it's arguably the most important component. Like having enough risk to get the growth you need is one thing, but if you don't have your distribution strategy on point, this can blow it all up. And we've run scenarios and we have a little case study called Mr. Smith and Mrs. Jones, but it's 2 investors who have the same asset allocation, the same withdrawal rate, but what they don't have is a real distribution strategy. They just say, hey, we're going to take money from our portfolio. One person runs out of money in 10 years, the other doubles their money. They did exactly the same thing. And it's just getting unlucky with the sequence of returns and making sure that you have enough liquidity, or what we call our bucket strategy. Doesn't ensure that you're not going to run out of money, but it makes it a whole heck of a lot more probable that you won't have to sell a stock market investment when it's lost money. And that's how you ultimately kill your portfolio. When you have to sell something at a loss to raise money to live on.
Yeah, it's the forced liquidation.
Yeah. So we want to, that's a really good analogy. Eliminate forced liquidation, which is just having a strategy put in place for distributions.
You know, it's interesting because, Casey, I'm going to go to you and then I'm going to finish up with Jonas over there. This idea of, you talk about forced liquidation. There's a lot of force on us in a lot of places, and we've talked about this the entire time, is evening things out. And the heart of this, dollar cost averaging, if everything tends to the middle, people tend to try to push back, but it's really tough to push back against the markets, the animal spirits, and Mother Nature.
Yeah, I mean, the gradual investing, the dollar cost averaging, doing a little bit over a long period of time. I mean, these are the things that really do, again, from a behavioral standpoint, allow people to really succeed. And, you know, at the end of the day, whether you have the best portfolio or maybe one that's not necessarily quite the best, if you will, consistency over time, those kind of principles are really what are going to drive success over to the future. And those are really what we want to focus on, you know, more so than anything else. Now, I do want to point out, too, we do have a guide actually as well, this investing during market highs, and you can go to premieriwm.com and actually download that guide in order to see a lot of the information that we were talking about today. You can also see some of the charts I know that we kind of reference back over that's built into that thing. But that is a great place to go through and take a look at how do you develop and how do you design your portfolio when we have these all-time highs that we keep hearing about in headlines. You
know what? I think that, Jonas, finishing with you, the concept of working with a financial professional, because you know what? You and I have got to the point where you say, I'm going to hire a travel agent because I need them to handle all the issues if something goes wrong. So it's almost a form of insurance, if you will. You've got somebody, a wealth advisor, who has the wherewithal because they do this all the time. That's what your job is.
Well, we're really, I think maybe an 8-headed monster now. We're really interested in this stuff. And I told you the story. I went to my dermatologist, and he looked at my skin for maybe, I'm going to say it was less than 3 minutes.
Yeah.
And he said, you have 2 pre-cancer spots. You can use the lotion and look like a skinwalker or a Sith from Star Wars for 3 weeks. Or I have this big tank of liquid nitrogen, and we can get rid of those. And I thought to myself, man, if I was trying to, do this myself, I would be in some serious trouble because he located the spots just right away. It just kind of, I was flabbergasted by that.
They're professionals. That's what they do for a living. And these folks are professionals too at Premier Investments and Wealth Management. Named to Forbes Best In-State Wealth Management Teams for 2025, Premier Investments and Wealth Management at premieriwm.com. Click Get Started and answer a few questions. They'll provide the one-page Premier Vision document. Or if you just can't wait now, pick up the phone. Number is 800-383-6590. For Roger Abel, Jonas Everett, and Casey Mushrush, I'm Doug Wagner. We'll talk to you again soon.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments in Wealth Management and LPL Financial do not provide specific, individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Dollar cost averaging involves continuous investment in securities, regardless of fluctuations in price levels. Investors should consider their ability to continue purchasing through periods of low price levels. Such a plan does not assure a profit and does not protect against loss in declining markets. Forbes Best In-State Wealth Management Teams ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firms. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.